All right, welcome everyone to the next episode of the Bullish on Bitcoin podcast and stream. Today we have Dan Held, Bitcoin OG, investor, marketer, and essentially someone who has been in the space for such a long time and I would say has seen it all. And today's topic is Bitcoin Hot Topics with OG Dan Held. Dan, I mean, thank you so much for joining us today. You've been in the space for quite a while. And we're also, of course, as Bob, for full disclosure, we're very happy to have you also as one of our investors. And, your insights into the market and, the operators, the players has always been very insightful. So we thought, well, why not shed some light on this for also our community?
Well, thanks for having me.
I think, to kickstart, Dan, do you want to, perhaps let's talk about the market as it is today. We've been going back and forth with this internally, and you and I chatted about this before as well. It seems like this cycle is the weirdest BTC cycle yet. Is the 4-year halving cycle over, and where are we heading? What's going on? What's your take on the current situation?
I mean, look. What's funny is, people will hand wring over year-over-year performance, but if you zoom out, Bitcoin's performance has been phenomenal. I think a lot of people will, they'll dishonestly compare a 2021 high price that only existed for a short period of time, with the current price, right? But if you look at basically what was the average price during a certain duration and look at the average price now, Bitcoin sitting at 80K is a pretty good position. A lot of people wish that we would have hit, multiple 6-figure digits. Of course, we all did. However, Bitcoin does its own thing. And what I've realized over 15 years in this space is that you can't tell Bitcoin what to do. It's going to do its own path. But, in the same way it moves unexpectedly down, it does move unexpectedly upwards. So I would say we've got a great platform here. We kind of washed out all of that bearish sentiment. And anyone who wasn't a true believer, which we saw a bunch of OG types go, I'm out, I'm done with the space. They're like, crypto's over. That sort of sentiment is a great sign that it's bottoming out and that we flushed out all of the weak hands. And what that means with the weak hands is that those folks were the ones the first to sell, which leads to more selling pressure than buying pressure. That causes the price to drop. As soon as all that incremental selling pressure is gone, demand stays the same or demand increases, so buying pressure. That's how prices go up. It's not rocket science. So with all of that bearish sentiment washed out, all we need is a little bit of a demand stimulus. And so what do I mean by that? It could be, strategic Bitcoin reserve. People have totally forgotten about that. If that gets announced, Bitcoin's going from 80K to 100K in a couple minutes, right? People just, it's funny how markets work. People are so short-sighted. That could be announced. We could have hostilities with Iran, that could cease. We could have all sorts of other things happen. And so in a matter of minutes, we could be back in a bullish sentiment market where, a month ago, everyone's like, oh, it's a bear market. But that's how Bitcoin moved in unexpected ways. Kind of reminds me of the 2013 cycle. Bitcoin in March went from $10 to $260, went back down to $100, and chopped at $100 for 7 months. It's kind of this grueling sideways chop. And then it went from $100 to $1,200. So, we could see a similar setup there. Fundamentally, we are in, I would argue, the most bullish in terms of return versus unit of risk time of Bitcoin's history. You've got presidents and governments being like, yeah, this makes sense. You have big banks saying this makes sense. No one's trying to kill us this cycle, which is nice. Previous cycles, that was always an existential threat. So I would say we're in a much better kind of political governance setup where, and I mean that from a regulatory regime. And then also, with the big institutions comes tons of capital. So this is, hundreds of billions or trillions of dollars of capital that's been trapped and unable to purchase Bitcoin due to XYZ factor. And with the institutionalization of Bitcoin becomes a real mainstream asset. And I think that's a good thing.
Well, speaking of, the institutions coming in, I mean, we've had I didn't make it to Vegas, unfortunately, but you were there, as I think, right? And there was a fireside chat with the SEC chair. I mean, if you could have told me 5 years ago that, hey, the SEC is going to attend a Bitcoin conference and give a fireside chat, I unfortunately I wasn't present, so I don't know if they spread a lot of FUD about Bitcoin and went on stage and said it's bad. I suspect not. Um, so I guess it's a good sign, right, for Bitcoin and the industry as a whole. But do you see there's perhaps a risk that Bitcoin becomes too respectable, too mainstream, too institutionalized?
Yeah, that's a great question. That's actually one I've seen. I've seen a few hundred of these in my replies on Twitter, that Bitcoin has lost its way. Usually, the folks asking this question are shilling another coin, like a privacy coin, of course, that hasn't lost its way. So there's usually an agenda, but coming from, like, I would say, more first principles, neutral perspective, like, there are different characteristics in which we could determine if Bitcoin has lost its way. One would be, has the code changed has the code been changed or modified to allow institutions to more easily corrupt it or to more easily control it? And the answer is no, Bitcoin's core code has not changed. It has not changed in a material way that would allow them to exercise more control over the protocol or diminish Bitcoin's decentralized nature. So that would be our biggest red flag of if institutions have come in and hurt Bitcoin's core value prop. The other one would be, I would say, like, does this introduce existential risks to Bitcoin's market? So a lot of people hand wring over, price suppression, that Bitcoin's price has been suppressed like gold's was. People forget that this was a gold bug narrative for like 10 years, that gold's price was suppressed until it isn't suppressed. And they're like, oh, that's the real market. Okay, sure. So they decided to suppress it for a while and just let it run. There's a lot of hand wringing over, is the price suppressed? That's more around price discovery and market dynamics. Bitcoin is really totally agnostic and not really part of that conversation at all. Bitcoin's core code cannot change exactly how it's traded. And the institutionalization of Bitcoin trading was going to happen. That's called winning. That's Bitcoin becoming a mainstream asset. If it, Bitcoin doesn't scale to become a global money if it just remains, peer-to-peer traded in the basement. I think that's cool that people want to do that, and that's awesome. But at the same time, for Bitcoin to be mainstream, we have to have institutions trading it, and of course, they come in with bigger size and they move markets. But the idea that institutions manipulate markets, I think, look, there's a bunch of settlements that big banks have done with various FX fixing, precious metals fixing, et cetera. The thing is, they weren't fixing the price long term, and they weren't keeping it capped. What they were doing is they're fixing it by a few pennies so they could win an options contract or two, right? Like, to manipulate entire markets requires such a large amount of capital that you would go bankrupt trying to manipulate it. For example, like the amount of Bitcoin or gold or FX traded daily. If you were to try to manipulate these rates and you are not a central bank, I mean, good luck. And if you're on the wrong side, you lose your entire investment bank could go under. So the idea that they're suppressing prices intentionally, I think, is a complete fabrication. Do they manipulate prices to make sure that they win a certain trade at a certain price? Sure, they do that all the time. Yeah, but that's not price suppression. So yeah, Bitcoin institutional adoption is good for Bitcoin. Bitcoin's code hasn't changed, so its core ideology and everything else has not changed. And the institutional capital that's flowed in has not led to price suppression. That's a pleb narrative where they're just complaining about Bitcoin not rising up in price as fast as they would have hoped.
Yeah, I mean, I don't know where, I can definitely feel like a slightly more positive market sentiment, but still, it feels like we're not bullish yet, and Bitcoin's at 80K. So I always find it quite amusing, that we're complaining about the market, and yes, altcoins and like all the beta plays go up and down. They're much more volatile, and of course, like builders and like things like the Kelp DAO hack certainly, leave a dent in the ecosystem. But even that, like I think that the ecosystem and like DeFi as a whole just gets bigger and stronger every time this happens, because the weak points are washed out, and it was thankfully recovered this time, or partially. But Bitcoin at 80K, and it was at 100 and something K before. I mean, if you look at 10 years back, this is insane. And the amount of adoption we've seen, and the amount of users and institutional interest, but also retail interest, is I think hard to imagine. If I think about where it was 10 years ago when I was getting started, and like everybody was like, oh, why are you doing this? Bitcoin's dead. And how many times has Bitcoin died since is quite funny. So
yeah, I mean, the fact that it's like a mainstream, well accepted profession sector, it's serious, it's mature. You have Bitcoin and Fidelity, Robinhood, Morgan Stanley, BlackRock. I mean, what's funny is, I don't know if you follow the Bloomberg ETF analysts. There's two of them. That's Jeff Seifert, I think is how you say his last name, and Eric, I think, Ballhaus. And Eric has some really good analysis over inflows and outflows out of the IBIT ETF, which, by the way, is the most successful ETF in history in terms of AUM achieved at a certain time. If you look at the inflows and outflows, there were very little outflows from the Bitcoin ETFs during this bear market. So these ETF holders are actually better hodlers than most Bitcoin spot owners, which is kind of wild. So that, I think, was a hugely bullish sign that all of this money inside these Bitcoin ETFs, whether it be retail or institutional, they're hodlers too. So that hodler sentiment is still pretty much how people look at Bitcoin as an asset. It's ultra volatile, so the only way to really survive this is to hold on to it.
But I mean, the one thing that has come up, and we're again kind of switching topics here from the institutional aspect to Bitcoin's predicted death over and over again. And right now, the net new FUD is the quantum resistance debate, and specifically what to do with Satoshi's sacred coins. There's been rumors, right, that supposedly the Galaxy leaked that one of their big whales has basically decided to sell like billions of dollars worth of BTC because they're concerned about quantum risk. And to be fair, I've heard from many sides that OG investors, LPs who have a lot of BTC, or these are non-technical people who got into Bitcoin early, but come from other businesses and are not experts, that they have actually gotten quite anxious about, well, what happens when quantum computers arrive, and could this be dangerous? And right now we've seen a rise of this debate again. I mean, Nick Carter, obviously also one of our investors, leading the charge there and fighting some of the fights on Twitter and so on with the core developers. And whatever you think of that, I think, we definitely have this topic at hand where I think it's easy to get confused by thinking that a lot of people outside of crypto actually worry about this. I think within our inner circle of people who follow BTC closely, yes, we all think about it, we all worry. We still don't know if quantum computers can exist. Like, it's still to be fair, it's still a debatable topic whether it is possible for a quantum computer to be built that essentially breaks Bitcoin. But then if you look beyond BTC, I mean, yes, there's probably analysts and institutions that follow this, but the normal user holder doesn't really care. And I don't think they know. What's your take on this? Like, do you think the quantum computing risk is really essentially preventing institutions and like broader retail to move in and buy it? Or is it still more of an internal like Bitcoin or bubble issue?
Yeah, I mean, there's a couple different ways to think about it. One is, so let's touch on a few different things. One, is it a threat? I think the answer is long-term, yes. I think to dismiss this as a impossible thing that can never occur is a really wrong way to frame it. Now, there's a lot of things that are going to happen inevitably. But does that mean that we need to worry about it today? Or does that mean that we need to freak out today? Not necessarily. I think that game theoretically, which is basically like, what do we decide to do? With it being possible and that possibility happening within a certain timeline, which we're not sure of, because that's really the core crux of the argument is, can it happen? And if it's going to happen, when is it going to happen? And so if people agree that it's going to happen, then there's a lot of disagreement on when it's going to happen. Is it 5, 10, 20 years? Given the nature of us not upgrading in time or getting our everything ready in time, and how bad that will be for the protocol, I think it's smart to be proactive, even if we're wrong on timeline. Now, there's some valid concerns on moving too fast. If we move too fast, there's a couple of different issues. One, there could be a bug in the new type of signature scheme that we introduce, a bug or an exploit. So that could be a risk. So this isn't a non-zero risk to upgrade the protocol. And I want to give a lot of credibility to the side that's arguing against upgrades, because they argue that, of course, you can introduce a flaw. There's also, the post-quantum signatures are quite large in bytes. So there's different ways to get around that or minimize that, but we're basically going to see more expensive Bitcoin transactions. And they're more expensive because they have more bytes in terms of data size. The higher data size transactions and if everyone moves at the same time, the Bitcoin blockchain will be congested for quite some time, which isn't a bad or good thing, but that means we need to start the migration now, and that could open up the conversation for an increase in the block size, which would be another political debate. So that it isn't easy to upgrade. There could be flaws in the signature scheme. Most of the signatures are larger than traditional transactions. But I think it's worthwhile that we investigate it and put a plan together in place, because the consequences of not doing so are worse than the consequences of doing so, in my book, in my personal opinion. The second part of this equation is more political rather than code, which is, do we seize Satoshi's coins? Because TLDR, for the folks who don't know, basically to upgrade to post-quantum secure cryptography, everyone would have to move their Bitcoin to a new address, essentially. If people don't move it after the certain migration period, their coins will be known to be possibly exploited, aka their private key can get cracked. And we know that certain coins, like Satoshi's Hoard, would be one of the coins that gets targeted, one of the wallets that gets targeted. If that's the case, the worry is this is stealing someone's coins who never wanted them to be stolen. They never anticipated quantum computing being able to crack their private key. So it's a theft, but it's not a protocol flaw. It's an outdated protocol, right? So there's a bunch of different ways to deal with this. One, the protocol could burn any coins not moved after the migration period, but that's the protocol making the decision of who owns what coins or the supply of coins. That's a dangerous path to go down, so I'm not personally a fan of that path. You have the path of just let it be. If people don't move their coins and a quantum computer cracks their private key, they earned it. That's sort of the camp I'm in, is a do nothing camp, which is, if the protocol decides who owns what coins, then that gets really, really tricky further down the road. And so,
are you not worried that if Satoshi's coins move, I mean, from a technical and like Bitcoin clandestine perspective, like protocol, that kind of makes sense. But are you not worried about the implications that will have on Bitcoin if such a large stash of BTC is moved? Potentially people try to, I don't know if, how the selling would work, if exchange would even allow it, like what would happen to it, right? But it would be definitely a very, I would say it would be a black swan event where maybe a lot of people panic, and it would definitely disrupt BTC. And then suddenly, it would cause panic. People would start moving their coins. Network would get congested. It would stress Bitcoin to the utmost. If Bitcoin survives this, great. Yeah, then we're really safe. And, we've cleared even the worst case, like the final enemy is basically the cryptography breaking, which was always the thing that Bitcoin kind of, was super strong at. And I think, repeating this back to you, it is kind of a compelling argument to basically say, well, this is the final stress test for Bitcoin to becoming the global currency, essentially.
Yeah, I mean,
or the thing that survives for the next 30 years or 50 years, 100 years.
There's technically a third scenario. You can take the coins that were going to be burnt and then put them back into the issuance schedule, which solves Bitcoin's long-term security problem as well. But that's a more creative one I've heard. There's other ones as well that are a little bit more edge case, but that's kind of broadly the three ways that we can deal with it. The two main ways are burn the coins, don't burn the coins. With Bitcoin's price, look, I mean, I survived March 2020 where Bitcoin dropped 50% in one day. So I don't really care if a couple of plebs panic. In regards to the game theory of the key cracker, so the quantum person who is running the quantum computer, which will undoubtedly be the United States government. It'll be that or China, but most likely the US government because our access to compute and capital is far larger than China. Likely be the US, I would say a 95% chance of being the US government. So you have a couple different things here. What I find funny is everyone's take on this is immediately panic. It's the most retarded possible game theory choice that people choose. I know you're playing devil's advocate here as host, but they're like, oh my God, the keys will get cracked and this attacker, this government's going to immediately go to Binance and market sell. And I'm like, okay. So you're telling me this entity that spent decades building this quantum computer, the first thing they're going to do is not sign with the private key and say, hey, by the way, I cracked it. Here's what I'm doing with it before they move it, because they can do that. They can with their private key, they can sign a message and say, I'm about to move these and here's why and who am I. They don't have to just move them and have everyone freak out. So first of all, they'll probably sign with a message saying, I'm moving these and here's why. Second, no matter who the actor is, a state actor or a commercial actor like an Amazon, why would they intentionally shoot themselves in the foot and have terrible price action with selling the coin? Let's say they don't want to hold on the coins, which is a whole assumption in and of itself. What if they want to hold on to the coins? What if they say, we're going to hold on to this forever? Boom, done, no big deal. Let's say they want to sell. So if they want to sell, if someone who's that sophisticated wants to sell and they want to sell that much, they're not going to go market sell it. They're going to have a very structured and safe process around going, okay, everyone, we're going to sell, let's say there's 1 million Bitcoin they have. They're like, we're going to sell 100,000 Bitcoin per year for the next 10 years. It's going to be a structured process. We're going to work with OTC desks to minimize the impact. The last thing they would do is go market sell it on an order book. Like, that's fucking stupid. It's just so ridiculous that that's the predominant narrative of what this entity would do.
Yeah, I don't think, I don't think this is likely to happen. I mean, if we play devil's advocate, and again, like my perspective is I don't think a quantum, like somebody who built a quantum computer, I don't think the thing that's on their mind is I'm going to hit Bitcoin and steal the Satoshi's coins and kill it, right? I mean, there's decades of research behind this. First of all, they're going to communicate. It's not like there's so much money in this. They're not going to be silent, no progress. And we already see they communicate, they release updates. We've made this, we've made that, because it's a race. Like, and there's so many more things you can do with this thing than crack the Satoshi's keys. So it's not going to be a surprise. And two, that this would be the first thing they do. Like, so who would want? So basically, the state actor or whoever does this would really want to have Bitcoin dead. Like, that's the only scenario in which I think this would happen.
And again, they wouldn't kill Bitcoin at all. Yeah. Like, it wouldn't even kill Bitcoin. It'd just be a tiny little blip, boop, and over.
And if they really do, and in fact that if so, let's say this leaks and the state actor who really wants to kill BTC gets hold of this technology and tries to kill it, what's going to happen is probably just going to rally the community for once behind to actually fork and do something. I think that the bigger risk to be fair is
I don't think the community would fork at all. They're free to sell the coins. I don't give a shit. Like, Bitcoin dropped 50% in one day in March of 2020. Mt. Gox, how many coins were missing? If you look at like 1 million Bitcoin, that's actually not that much volume wise.
I mean, Strategy has what, 800 something thousand, and
Yeah.
that's like one entity at this point. They could
Yeah.
sell, nothing stops them
Exactly.
theoretically. So
Yeah.
I think the bigger risk, to be fair, and I'm not a person to fear monger here. I'm personally more in the camp, as you said, like it makes sense to invest the time. It would be stupid not to do anything about it. My biggest concern is not the tech, actually. It's more the political debates and the infighting of what to do with Satoshi's coins, and perhaps the FUD that is maybe created out of this whole debate that perhaps scares off other people, because it's this problem that will be looming over Bitcoin for, I mean, it could be the next decade or longer, right?
Because remember the two pieces of FUD that are inevitable. One of these pieces of FUD will be the predominant piece of FUD with quantum. Either the protocol freezes or seizes the funds, which is a narrative and a bad one, or the narrative is that like Bitcoin was broken and the coins are hacked. Because when the coins get hacked, journalists will not report on this correctly at all. They will, of course, create huge, crazy narratives that Bitcoin is broken, Bitcoin is cracked, Satoshi's coins have been seized, all those. So it's kind of pick your poison FUD narrative is Satoshi's coins are cracked and the Bitcoin's protocol is broken, or the protocol is now political and making decisions on who owns what. It's kind of a pick your poison, and that's where it's a really tricky decision, right? Like it's that Satoshi's coins being seized or cracked, Bitcoin being broken is an equally bad narrative, I would say, but slightly worse or slightly less bad than the protocol seizing coins. So for me, it's like a very little difference in terms of how bad the severity will be. But I know one long term has different political aspects to it than the other one. So that's where I lean allowing for his coins to be seized.
To be fair, I personally see the bigger risk in not like a state level actor attacking Bitcoin. Perhaps quantum computers are developed further, but it becomes something that is not publicly disclosed. Technology proceeds, results are derived, and we see like there's a halt in progress, but actually behind closed doors there is more research, there is more progress, and then it leaks in. Someone does get hold of it, which there's been so many hacks and infiltrations recently in DeFi and all over the globe, right? It could happen again, that some group, and then again, could be a terrorist group, whatever. These are like, obviously these are hocus pocus, whatever scenarios, but the bigger risk is I'm not moving Satoshi's coins, but actually starting to hit old wallets, not Satoshi, smaller ones, or Bitcoin in flights, or people who sign with their current keys, because you would know, like you can probably shave off a lot of money without people knowing that something's wrong before people get wind of it and are like, wait a second. And you could always blame it on social engineering attacks, AI, basically. And then like, I think this is the much bigger threat vector, but it wouldn't kill Bitcoin. It would just, someone would make a lot of money without anybody knowing, but it wouldn't kill BTC, right?
Yeah, that's the smarter way to do this. If you had a quantum, well, the problem is with it, so there's fun little second, third order consequences to this thinking. One, I agree. Like if you had exclusive use to this quantum computer and that no one else had one, then you could go snipe, these older wallets and no one would know. It'd be kind of like a slow accumulation. The problem in that is that you assume you have the only one. And so you'd have to really know that you're ahead of the curve by, I don't know, and remember, like some of these keys might take a while to be cracked. Like it's not like it just, I don't think well, I'm not a computer scientist.
It depends how many qubits you have, right? But it is, I mean, at a certain level, it becomes almost instant.
Yeah, of course. Yeah, super advanced with enough qubits, like you could just instantly crack it. But I'm assuming they'll try to crack before they get there. And so it'll take a certain amount of time. So yeah, and then, there's other things as well. Like, yes, they can crack. So it will definitely be a state level actor. The NSA has been under the assumption for the last 20, 25 years that they want to collect and crack later. So they've been collecting a lot of encrypted communications of their enemies, knowing that a quantum computer will be built someday and they want to crack that communication. So there's a stack ranking of different things they're going to want to crack first. I would assume there's probably some state level secrets that are like pretty high up there that they want to crack. Again, I'm not it'd be really crazy someday when it's declassified to hear the internal conversation of who decides what thing to crack first. Like how do you stack rank to crack, Satoshi's private key versus these other things, it's a fascinating conversation of what to pick.
Yeah, I think that's the point, right? You can fearmonger and so on, but my biggest worry is, as you said, is just the reporting on it and just, journalism and people who don't like BTC or entities or that are against Bitcoin. Although, to be fair, I think at this point we're in luck, as you said. Like, I don't think anybody's really trying to kill BTC at scale at this point in the cycle, at least this cycle. So it's more of an internal debate that hopefully remains contained, as long as it doesn't prevent new buyers from coming in, and the assessment is somewhat more pragmatic, and hopefully and to be fair, realistically, institutions, when they decide whether to buy or not, now they will have analysts look at this, and they'll probably be more pragmatic than, oh my god, it could be a quantum computer could emerge tomorrow. And to be fair, it could be a hedge investment, right? If you're investing into quantum and Bitcoin, you're kind of hedging your bets here. So,
and look, I mean, even the most optimistic scenarios are pegging quantum 5 to 10 years from now. So, we are talking about a very optimistic timeline, but I like to plan for timelines like that rather than us be surprised 5 years from now and we're not prepared. But I just want to call that out, because as much as we're digging into it, this is also a theoretical thing that may or may not actually happen in it, or it may take a really long time. But like I said, I think it's better to be prepared. I was actually on stage with Adam Back in Paris Blockchain Week. So him and I had a fireside chat. We talked a bit about quantum. There was actually a fun question that I posed to him. So we had a back and forth on both institutional adoption and quantum, so similar to this chat. I asked him, why didn't Satoshi burn his coins? Satoshi understands that, okay, so he's like, which, by the way, Satoshi self-identified as a he, so it is a he. He decides that, I don't want to ever spend these coins, but he also doesn't burn them, and that because he can send his Bitcoin to an unspendable output and provably burn it. Why didn't he do that? That's actually what weirds me out the most, is that he was very, very intentional with everything he did. So why this? We Adam and I joked on stage. It could be Occam's razor. What if he forgot his password?
I mean, it would not be the most unlikely thing to happen, or his hard drive broke, or I don't know. We'll never know probably what actually happened. I hope we don't. I don't want to know, to be fair.
Yeah, maybe they destroyed the private key, him, or they destroyed the private key, and then later we're like, oh shit, maybe we should have sent it to an unspendable output. These are human beings after all. They're not gods. So, but that was a fun one. I don't know if you have a take on that.
Whether it was one person or multiple, I think, back then, who would have predicted how big this will get, And if you look at the original code and the decisions made, it wasn't perfect at the time. Bitcoin has evolved and improved and turned into something that was started by Satoshi, but it's no longer the original code. It's no longer it grew with the community and the meaning Bitcoin has for all of us. So, us expecting, and I think that's what we like to do, we project like, oh, someone who invented this, with any big CEOs, big founders, right? We project that they must be geniuses and they know everything, but everybody's human. And, when you get started, who knows what. Yes, so I generally think that I don't think the person maybe thought about burning the coins. Perhaps the more likely case is that they just no longer have access to whatever machine they used, not even purposefully. Yeah.
But yeah, it's a fun idea though. Like, why didn't he burn the coins?
Because then he wouldn't have 21 million anymore. But then again, some other people did burn it, so it's kind of
yeah. There was a early Bitcoin L2 that did that. Which one was that? You wrote your PhD thesis and this stuff. Let's see what
burning. I mean,
it was like where rare Pepes came from. That shade.
Yeah, I mean, my PhD wasn't in on-chain historics, but this is like counterparty.
Yeah, counterparty. That's right. Yeah. They did like a proof of burn mechanism.
Yeah, but there's been a few proof of burns in the past, right? Like people burning coins purposefully to do things, and now, well, But the other theory, I mean, we could never know. But the other theory is he or they knew that, well, one day Bitcoin is going to have its problem, right? Because Satoshi is famously quoted for, in the future, Bitcoin will have a lot of transactions or not at all. Perhaps there was about the debate of like Bitcoin, the emission curve declining. Perhaps that was like, well, the thought was, well, I'll just, put it back into the pool, or I'll start paying miners to keep running it. But this is all more, again, pure speculation and more fun than anything else.
It's fun to think about.
Kind of, so we've talked about a lot about, I think the takeaway from this conversation for listeners should be that, as with many things we've seen in the last decade, quantum is a topic that we should take very seriously. But it's not going to kill Bitcoin today. It's not going to kill Bitcoin tomorrow. And it's likely not going to kill Bitcoin at all. It might give you a very good opportunity to buy cheap if you spend enough time to understand what it means for the protocol. Of course, if we don't upgrade at all, that would be a mess. But I'm quite confident that there will be social consensus. And to be fair, even if Bitcoin splits and there's a group of people who don't want to upgrade and 3 different groups that have 3 different forks, one of them eventually will prevail. And it won't be the one that hasn't upgraded if there's a quantum attacker just sniping all the transactions. So totally. Bitcoin will survive one way or the other. So I'm personally not worried. I'm not trying to move my coins. And again, please stay away from quantum resistant Bitcoin wallets, because I don't think that doesn't really.
Yeah, TLDR for anyone watching this, you don't need to do anything today. This is a very theoretical, far in the future threat. There's an active conversation going on, but no, this does not threaten your Bitcoin today. I'm not taking any actions with my Bitcoin. So that's my personal advice for myself. So yeah.
Now, going back a bit to the institutional topic, right? And this is the last big one for today. Like one thing that, in this whole institutional kind of development that bugs me a bit, and to be fair, bugs me the most of all of the recent developments, is that with so many institutions moving into the market and Bitcoin becoming mainstream, Bitcoin is still not ready for DeFi in the sense of we still don't have an easy way to trade Bitcoin and use it without trusting centralized providers. And that's kind of what still drives us at Bob, and there's other teams out there working towards this. For me, if I have to ask, and to be fair, maybe I'm too maxi for this, but in my opinion, if I have to ask my bank whether I'm allowed to move my Bitcoin or not in the future, then it's no longer Bitcoin. If that's the only way for the majority of people to move BTC, and to be fair, it is not that today, right? Over 50% of BTC is like custodied off-chain and self-custody. At least that's what the on-chain data suggests. Won't know for sure, but there's very good pointers that this is indeed the case. Could be multi-sigs where, of course, like some institutional custodians have some of the keys, but I tend to believe that there's still a large portion of people who actually just hold Bitcoin in their own wallet and don't necessarily rely on centralized exchanges. But I personally do worry about this. Like one of the biggest worries I have is as we cheer on that you have Strategy and all these other capital market players moving in, and institutions buying BTC and pension funds buying Bitcoin, at the end of the day, Bitcoin still has no easy way for us to hold it as a user. There doesn't even exist a good multi-sig setup, right? That's user-friendly, like Ethereum has it. So they're just like the tools for DeFi and allowing people to do things with Bitcoin without entrusting it to a centralized platform are still so far away from the industry standard. And that's what worries me the most. And I guess, Dan, like a question to you, right? Where do you trade? I mean, and again, if this is too personal, feel free to not reply. But if you buy or when you trade Bitcoin, like where do you trade, and what would make you personally stop using a centralized exchange for you buying and selling Bitcoin? If you're selling it for stable coins, say not just for fiat. For fiat, yeah, probably you'll use the fiat rails that centralized exchanges provide.
Yeah, I mean, you're kind of asking the wrong guy. I'm not really a trader, so I mean, it's true. Like all I do is hodl. It's actually quite fantastic because then I don't have to worry about all of this. But when I do execution, which is rare, like execution as in want to place a trade, which is usually just something that like is very systematic and or long term. This is something where I'm going to go and do it on a reputable spot exchange and then either move the coins in there and then fiat out, or I'm going to do fiat and Bitcoin out. And then as soon as I get the Bitcoin, I'm going to move it to my cold storage. So I'm kind of the wrong person to ask in terms of, I don't trust centralized exchanges. I used to work at Kraken, and Kraken is a very reputable, great exchange. And Kraken was one of the first companies to do proof of reserves, to prove that they had the Bitcoin on their balance sheet and all the other assets, which I think should be brass tacks in this space. We're in the crypto space after all. Most of these blockchains are transparent. Exchanges should be going, here's our list of assets that we have. Now, of course, that doesn't, we don't know their list of liabilities, so it only is one side of the picture, but at least it's a part of the picture. But yeah, and for me, like, Kraken has been around for 12 years, very reputable exchange, same with Coinbase. I've got nothing negative to say about them. I'm just paranoid. I'm like an old OG that's paranoid. So for me, of course, the ultimate solution is in Bitcoin DeFi, where to be able to trade from your non-custodial wallet would be the most ideal setup. Now, to your point, there's a couple different issues. One is just the UX issue, which is more of a solvable, more easily solvable one. The other one is around protocols. And so, I've done a lot of investing in the Bitcoin DeFi category to hopefully solve this issue. But there's a couple of kind of insurmountable ones. One is, Bitcoin doesn't have advanced smart contracting capability on the base layer, right? So you can only do a certain amount of things. If you use a Bitcoin L2, you have to use a bridged Bitcoin asset typically, which means that asset has been wrapped or bridged to the L2. What does that mean? That means something like WBTC, TBTC. The asset is essentially under a single key or multi-signature or federated model, aka multi-sig, where the coins have been locked up and then a new representation of the coin pops out the other side. So for those who don't know what that means, essentially you're given a certificate of a Bitcoin on this other chain. That's what a bridged asset is. And there's only so many ways around that, and it's sort of like the persistent issue. So, I would say, like, the reason why I invested in this category is I want to see a solution pop out of it. We saw some novel things come out, for example, with ordinals. Ordinals actually exist on the Bitcoin base layer, which is kind of cool. It's an old iteration of colored coins. And Alexi, are you still there? Your image is frozen. There we go. Okay.
There you go.
Cool. Ordinals were a iteration of colored coins, which means, the Bitcoin protocol doesn't know that you're interpreting these transactions to mean something else. So with ordinals, basically, we look at the Bitcoin base layer and transactions are moving, and we're interpreting those actions to represent NFTs or other asset types. That's a really interesting way to do, to do different types of DeFi activity on the Bitcoin base layer. Colored coins were a known thing almost over a decade ago. But ordinals, built by Casey Rodomore, he was the first one to kind of popularize it. So I could see multiple types of breakthroughs happening on L1s or Bitcoin's L1 or L2s in the next, year or two, where, we've got, of course, at Bob, you guys have been doing BitVM for a while. There's a lot of different pathways here to success. And so, that's why I invested heavily in the category across a wide variety of bets, because I'm not exactly sure how it's going to happen, but there's a lot of smart folks like yourself that are working to solve this issue.
The funny thing is that, the easiest way, yes, DeFi is a very broad term. You have advanced things, right? Like basically what we see in capital markets, lending, earning on Bitcoin, doing more advanced strategies, options, perps. But the simplest one of all, swaps and trading, buying and selling, which is still the predominant, if you look at, what do people do with Bitcoin? Well, they trade it, they buy, they sell. There's $800 billion of monthly volume on centralized exchanges. Sure, probably a bunch of that is wash traded. Say it's only 400 billion. Is more than anything we see on chain for BTC wrappers or like cross-chain swap protocols. But actually, we've known how to do this since 2012, right? Tier Nolan, for those Bitcoin forum archaeologists out there, right? He came up with atomic HTLC swaps where you could, lock coins on Bitcoin or two different chains and exchange them atomically. And that's been done for the longest time. And we've seen recently, like essentially a surge of it with protocols like Thorchain, Near, essentially merging, and also Bob's gateway product, allowing you to natively swap Bitcoin versus stables versus other assets without going to a centralized exchange. So, I'm with you on fiat to crypto, right? There's just no way around central, because fiat is centralized. You kind of have to have someone that on ramps you. You can do peer-to-peer trading, and that has existed, but local Bitcoins and other platforms have been shut down.
And also, I'm not a fan of algo stables. Algorithmic
Oh,
stable coins are kind of an inevitable, unsolvable problem. So
yeah, it's like dollar asset back, right? Dollar. I mean, I think we're past algo stables at this point. I don't see them. I mean, at least probably will reemerge again, but I think recently, USDT, USDC, and other dollar-backed stable coins, and perhaps Eurostate or whatever, they will emerge as a centralized piece of fiat that exists now within the DeFi ecosystem, which makes sense, right? So they do have to talk to each other. You could. This is like the inverse of putting Bitcoin on the centralized exchange, right? You take a stable coin and put it into a DEX. But for stables to crypto and crypto to crypto trading, there's actually not much reason to use centralized exchanges, because you have these tools and they have been getting better and better. The last thing to solve, I guess, here is Bitcoin speed, whereas waiting for 10 minutes kind of sucks. But there are also ways to get around this. So I guess the question is, with all the recent developments in swaps and intents and things like Bob Gateway that we've been building, do you see the market moving? I mean, if you look at the numbers right now, the market for cross-chain BTC swaps currently is like a $300 to $400 million a month. On centralized exchanges, it's $800 billion. That's like a pretty big gap. Do you see that, moving over on chain? Do you see more on-chain trading happening, or what do you think will be the catalyst for essentially more people to trade on-chain versus on centralized providers? I have my opinion, but I'm naturally biased.
yeah,
Building one of these protocols.
there's a couple different types of catalyst. One is, if we have a proper retail-led bull run, I think we're going to see a lot of speculation in the Bitcoin DeFi products, because people are going to want to speculate more. They want to swap in and out of assets. They want to borrow. They want to lend. These are different speculative activities that in a bear market, there's just not as many happening. Also, remember that a lot of CeFi services are not accessible for anyone globally. That's why DeFi offers such a nice service, is that anyone, anywhere can access it, which means that your user base can be anyone in any country, anywhere in the world. We didn't, this last cycle, I think, see a proper retail bull run, so we didn't kind of see that kind of burst of new user acquisition like the Ethereum DeFi summer had. Kind of a very different experience for this last bull run. It was more institutional led. Part of our thesis is that, in terms of my thesis in investing in Bitcoin DeFi, is that the Bitcoin DeFi will have its resurgence when you have that retail-led bull run, because of all the speculative activities occurring that these DeFi activities offer that, and people want to speculate on the coins. I saw in the Ethereum DeFi summer that the coins were used, they were kind of used as quasi-equity, being used to, just as Uber sold their equity, got cash, gave that to riders and drivers to come use the network. Similarly, that's what these protocols do, is they throw incentives at the users to come get them to try it. Now, how many people stick around? That's a whole different question, and that depends on how you create your incentivization. And that's a big marketing problem in the space that I think a lot of people don't tackle very well. But outside of that, I'd say technology-wise, we've got quite a few different types of Bitcoin DeFi that's been built. So I'm not sure if there needs to be a breakthrough right now on that. And I think the user interfaces are okay enough. People will jump through a lot of hoops if they want to do the things they want to do. So that's kind of my take, is that I think it's mainly a market timing issue rather than a tech stack issue, or something else that we're waiting on. But I'd be curious to hear your take on it.
I mean, certainly, market is certainly a very big factor. I mean, we've seen the volumes on cross-chain swaps come down in the recent months, but we expect them to bounce back up as Bitcoin price increases. I mean, that's a pretty standard thing to be observed in the markets. What I do see is hesitancy among players, because doing things cross-chain in the peer-to-peer manner is great, because you can just connect your wallet and you don't have to sign up with 1 or 2 or 3 exchanges. You can connect your different wallets. You can go ledger to ledger, right? So you can really do a lot of things, but perhaps that's also the problem. You have too many options, and it's actually more a pro user interface, not a retail friendly interface today, right? If you look at these platforms, they're not they don't cater to retail. They cater to power users who are in DeFi, who want to go in and out. So nobody has really quite cracked the doing this in a very simple and smart way yet. I think it's going to happen, right? Because it is easy enough to do at this point. It's easy to do smart accounts. It's easy to set up a platform that uses cross-chain swaps. One thing is the UX, like in terms of speed, like that certainly is a pain point that I think will get solved. We have a solution and take on it, and there's others that I think are working towards that. You can do Lightning, you can do zero confirmation transactions, and like handle these things in a smart way. That certainly prevents people from doing day trading and like more active trading on BTC, because if I have to wait for 10 minutes for it to settle, the price will move right elsewhere, and that's an issue. But that will get solved as well. So the other part, right, apart from UX, is that players like Thorchain and like there's Garden and so on, they've been hit with laundered funds, right, hacker funds, illicit funds over and over again. There are players in the market, right, and you have to give shout outs like to New York Chainflip, like Bob Gateway is also very conscious about finding ways to have decentralization and no trust in when you trade, but it doesn't mean that I as a user want to trade against a terrorist actor, right? Like by no means. Like I think there's a double-edged sword here, and there's two camps. There's the camp that says, oh, protocol is protocol and you should never censor coins. But then they celebrates when a hacker linked to a state level terrorist actor basically steals user funds and tries to move them into BTC because it's easier to kind of launder that way. And then there's the other camp, and I personally count myself into that camp as well. We should be better, right? That if we want retail to adopt this, we can't be like, oh, code is law, and then only change it when we see fit, because that's right. All the people who say code is law, usually they compare it to Bitcoin, but then change their own protocol when it suits them. So I think that's one of the issues that we've seen recently, is that big institutions, while its players still kind of are not sure if they should touch it or not, because there is this kind of issue of some of these protocols, they are well known to be linked to illicit trading. And I'm not necessarily Thorchain in this case, they process it, right? But there's other protocols out there that are even like specialized in this, right? And I think that reputational issue is something that is probably going to make it a bit more difficult for some players, bigger institutions, to integrate, unless you offer them a solution here. And like, to be fair, like with intent-based solutions where you essentially pair solvers and market makers with retail traders are much more robust here, because these institutional traders that actually can provide the liquidity, can trade, they will not trade with criminals, right? So I think that's a much more robust approach that is getting solved. But we'll see what happens. Like, that's what I'm worried most about, is the reputational damage of basically this being seen as, well, you can just it's just for laundering money, because it's not, right? That's a very small portion of the market.
Yeah, agreed. I mean, there's always been this reputational issue with Bitcoin for a while, but I'm not exactly sure how to solve that one.
Well, Dan, we're already at time. I think, perhaps to wrap it up, one final question for a quick kind of reply from your side. What do you think is the most underpriced Bitcoin narrative for the next 12 months? If you had to pick one and only one, what would that be?
I mean, obviously, Bitcoin DeFi, I think, is huge. I've been clanging that bell for almost 4 years now, so I still think Bitcoin DeFi is very underappreciated, very under talked about. I just think people are overly bearish right now. Like, it's the market has a great setup currently. I think that, to see all these people are like, oh, I've been working in the space for 4 years, now I'm out. I get it. Like, you have to have a career somewhere, and like having your whole net worth in career, sorry, in career in the same space is brutal. I get it. It's almost been 15 years of that for me. I had a brief stint at Uber headquarters in San Francisco for 2 years, but like it's tough to have your entire net worth and your income in the same space. So I get it for those who are professionals. outside of that, though, I mean, from their personal investment perspective, it's people selling everything and leaving. I'm like, okay, sure. I've seen this happen 4 other times in the other 4 cycles. So I'm okay with seeing the weak hands leave.
All right. Well, Dan, thank you so much for joining us. And yeah, we'll have another episode of the Bullish on Bitcoin streams next week and the week after. We have a whole row of really stacked and top tier guests coming. So stay tuned, sign up. And yeah, Dan, again, thank you so much for joining us today.
Thanks for having me. Cheers.